All right, guys. So welcome to this teaching. Today is day 4 by God's grace, and we'll be going a bit deep, right? So in the previous lecture, we talked about the concept of daily candles, the importance of all of it, and I promise I'll be talking about time and price today. All right, this course should have been held by 8 o'clock, but we're holding a bit late because of my schedule. All right, so that's why we're having this call by 8:30 today. All right, so let's talk about time and price. Right, so time and price is what we're talking about. Right, the first thing that you must understand is that time and price refers to the where, the when. Right, I was kind of give kind of introduction. So when you're talking about time and price, refer to two things. Number one, the when, and then the where, right? And then the trading model, right? So when you're talking about time and price, you're referring to the specific time in the market where certain things occur, because the market is controlled by an algorithm, right? And an algorithm is a sort of computer program that is designed to do certain things, right? So now this computer program has a way it behaves. As with every other computer program, they have a way they were coded or programmed. All right. So when it comes to the financial market, there are specific things we look at for when we are talking about the interbank price delivery algorithm. All right. So that's where we blend in time and price. This is why I feel more comfortable trading currency pairs, all right, compared to synthetic and other stuff, because it has a time element. So I know when to come to my chart. I know what I'm looking at for based on time. So for instance, someone like me, I can't be looking at the market in the midnight like Nigerian time. I can't be looking at the market by Asian session, right? I only trade London and New York session because there are specific times I use to look for my trade setup. Right? It's the importance of time and price. Number one, it helps you to limit your time on the chart, and it gives a specific model to look for on the chart. All right. So in time and price, we're referring to three basics. And sorry if you're a swing trader, this applies for mostly intraday or day traders, right? If you know, if you're intraday trader, you're a scalper, all of those things, as long as your method of trading does not involve holding to the next day, then this is for you. All right. So we're going to be talking about time and price in details. Now, when it comes to time and price, you must understand what to expect in different time zones, right? So during the Asian session, during Asia, right, you typically see a consolidation. That's what I talked about this yesterday, right? So during Asia, you typically see a consolidation, and this occurs between, I told you guys already, it occurs between 7 p.m. to 12 a.m. And this time is New York local time, right? So you're using New York local time. Remember, you're coming to time zone here, and you're clicking on New York. Remember New York, don't forget that. So you're typically expecting a conversation during the Asian session. This is the model you're looking at for, right? Now, when you have done with your consolidation, then during London, during London, you now see what during the London key zone. That's when you look for what your opportunities. And typically during London session, the market typically forms what is high or low of the day. Right. This I'm giving you guys what to expect during different sessions, right? So during the London session, the market typically forms the high or the low of the day. And if the market is bullish, it's likely going to form its low during London. And if it's bearish, it's likely going to form its high during what London. Then when that happens, there are two things that happen during New York session. I want to give you guys the specific bread and butter approach to trading the market from the intraday perspective. So when you come to New York, there are two things you should expect. Either it was a reversal or a continuation. Those are the two things you will see in New York, right? Either a continuation or what a reversal. And that is where the ICT optimal trade entry comes into play, right? I'm talking about optimal trade entry tomorrow, right? I'll just kind of give that as a free class, because tomorrow we're going to smart money concepts in depth. But before I talk about smart money concepts, I'll talk about the ICT optimal trade entry, just a kind of short video on that, right? It's just for New York session specifically, right? So now, this is the three things that you should note. That during Asia, you should see what a consolidation between what 7 to 12. That's why you go to Asian high and Asian low. So please watch the previous video if you have not watched this one. I mean, if you have not watched the previous one, right? And then during London, you usually see the market form what the high or the low of the day. And then during the New York, you either see what a continuation or what a reversal. So now these are the key zones we look at for the setups. Knowing all this, these are the things for our key zone. Right? Although we have Asian key zone, but it's typically for crosses like AUD, all those things, right? I'm not to talk about Asia, right? I typically trade London and New York because why? They're the most traded pairs in the world, right? So let's talk about this whole idea. Okay, now what exactly are you looking at for on the chart? Okay, if I come to my chart now, what am I looking at for? What can I do with this information? So now this first box signifies what? Asia. Right, I'm gonna just label it on top so you guys will understand what I'm talking about. So the first box is to typify Asia, right, based on the time. The second one signifies, signifies London, and it, right, is London Q zone. So the second line signifies. Then I think I should just clone this. Then this signifies what? This box signifies what? New York Q zone. All right, understand this thing now. So when you come to a new day, I'm giving you guys the bread and butter approach to trading intraday markets. So this is just all you're looking at for as a smart trader. And don't forget that you have to do top-down analysis, right? You have to have fundamental sponsorship. You have to look at the fundamental aspects. You have to look at the higher time frame perspective. I'm not giving you guys a lower time frame approach to trading. So I'm not going to discuss about higher time frame, right? I'm just giving you guys what to look at for. When you have identified your higher time frame bias and you know what the market should be doing, then you cannot simply come to your lower time frame and preferably a 5 or 15 minutes chart, right? And then you just simply look at the market. Okay, if you let's assume that okay, in this scenario now we are bullish, we want to buy this market, right? Let's assume that we are bullish, right? We have a bullish bias based on the higher time frame, right? So now remember that during Asia, you want to see the markets consolidate. Okay, now when the market comes during Asia, what do you want to see? What's the market do was consolidate. What's the market kind of range inside Asia? Remember the time for that is between what 7 to what 12 a.m. New York local time. Now, this box here, is Asia is between 7 to 12. Dubai, New York, London is between 2 to 5. So the hours of between the hours of 12 to 2, between 12 to 2 when the key zone begins, you are not doing anything. You're watching. This is 12 to 2. This is just the empty blank space. So during this area, you want to see when the market hits 2, you mark what the daily open price, right? The market was the midnight open price. And what did I tell you guys yesterday? You want price to do was go below the open price and preferably below was the Asian consolidation. So now you have marked your daily open price, right? You have marked it. I'm not giving you guys what I use for my trading. So you mark the New York midnight open based on New York time, not a local time, New York time. So you mark your New York open, all right? So when you mark New York open, what are you looking at for? What are you looking at for when you have marked New York open? Remember what I told you guys yesterday. If you have not watched yesterday's call, please go and watch it. It's very, very, it's like a sequel to this. Now, when the market has gone below, when the market midnight opens, sorry, what do you see? You want the market to do what? To go below the midnight candle and do what? Bash what? The Asian consolidation. So now, based on Asia, we have what? Our Asian high. This is our Asian high here, right? And this is our Asian low. I'm giving you guys the bread and butter approach to trading intraday volatility. So you have our Asian low here. This is the lowest point. So now, remember that if you're bullish, you want the price to go below first before going higher. So when the market comes down here, you're not doing anything. You're watching. You're waiting for your Q zone to come. So you're just quietly watching. Q zone is between what 2 to 5. So you're watching to see what the market is doing. So you start monitoring the market from when the market opens by 12 New York time. So you're watching now, and then the market now does what? It now gives what? A break of structure. So now this, and once this happens, you want this to happen maybe before or during the London Q zone. So now you now have what? Your break of what? Structure. So you have your BUS right there. That is your BUS. So you have your break of structure, right? BUS, right? So you have your BUS now. That is what it has given what a confirmation to do was buy. So when you now see this opportunity, then you can look for what a long opportunity to do what to take price. So simply go long, stop loss where below what the low created by what that candle, right? I'm giving you guys how to trade intraday the intraday markets. Very, very simple. stop loss below it, and first target should be what? Asian high, right? And maybe let's assume that there was a high before, there was a high around there, like previous daily high, right? I told you guys about what to do previous daily highs. So that's why the previous daily high was around there, right? The previous daily high was there. So the first TP can be what? The Asian high. You guys will see me say Asian high slaughter, all those things. This is what I'm doing. So the first TP can be the Asian high. If it's up to 1 you can take me partials there, and then maybe take your overall TP at what? The overall what? Previous daily high. So have you seen how this thing play out? This is how simple it is to trade the intraday market using this. So now this happens during London Q. So you can see your buy, maybe the market can buy during this period, pull back, buy, finally hit your TP, right? Now, we now enter into the London launch. So in this, remember that London Q zone, right, is 7 to 10. So that means there's a gap between what? 5 and 7. So in this gap, what do you do? The market usually was tall, or maybe you can just keep moving, right? So what do you do during that gap before New York Q zone? You wait and wait for what? An opportunity. And now, when this is happening, 5 to 7 is what we call the New York launch. 5 to 7, right? This is New York, London launch, sorry, London launch. So what are you looking at for? Either market can do two things. Either it continues being bullish or it reverses, and that can only be told from what the market is giving. So let's assume that the market wants to be bullish. Let's assume the market wants to be bullish during what? The London Q zone. So typically during this market like this, something like this, kind of range, and then enter into the Q zone, right? What has it done? That's created what? Liquidity. So we have now liquidity to the top, right? I have liquidity to the downside. Can you see this? So when I hit New York zone, if you are anticipating more bullishness, maybe we have maybe kind of other block here, something of that sort, maybe something here. The market can do what? It can drop below, give you an optimal trend, take out what? You take out this liquidity, take out this this low liquidity, maybe come back to that other block, and then give you what? Another break to do what? To take price what? Higher. To take out this liquidity first, and then consequently continue going higher. So now you now have what? Another opportunity. So if you miss the London opportunity, you can still get involved in the New York. So you can still take your buy at this BUS here and target what? Maybe this equal highs here. This is the I told you guys something in the last call that previous session high can also be what? Liquidity. So look at this previous session high here, and then you can see this can be 1:3. You can also simply buy here, TP here. That is all. That is what happens when the market wants to what? Continue. But if the market does not want to continue, what you see typically during this session is that the market is going to do, it's going to reverse. It's going to do something like this. Let's take out of this. So the market wants to reverse, it might likely just do something like this. Just take out this high, maybe distribute above it, and then blast and go all the way down. Just crash everything that it did. So this is what happens when market wants to what? Want to reverse. So I'm not, you can see that it is easier to even trade London because London is not so difficult to trade, right? It's just very easy to trade London session. Just very easy. If you're bullish, so if you're bearish, just the reverse, right? If you're bearish, it's the reverse. So bearish price action, your market was the Asian high, Asian low. What do? Your market to do what? To trade above the midnight open, give what that sell opportunity, and then what? You take your sales, take out the Asian high first, and then what? Maybe the previous daily low. So you take out the Asian low first, and then the previous daily low, right? It's just what goes up is what comes down, right? You can just backtest that on your own. So this is what you're looking at for when it comes to what? Intraday markets. It's very, very simple. It's nothing difficult. Very simple. If you're looking at for when it comes to intraday markets, just keep the time. So now let's go back to our example. If the market was bullish, let's go to our example. The market was bullish, right? So maybe because your buy during this period, market bought, and then it gave you a very beautiful buy. Now, when the market hits here, you can also start taking your profit. So the market can also expand. This is between between 12 to 1. You will now see what London, you have a New York launch then. So if you want to take profit then you can take profit then. So between 12 to 1, you have London, New York launch. So market usually stores around there. So this is another blank period. So you can look out for and simply take your profits there. Market hits, you cannot TP there. No. You must not hold all the, you can TP either there or anytime around there. So this is just a model So that you can TP during that 12 to 1, or you can TP what during what London, which was 3 to 5. So it's up to you. If you see have TP that you think can be hit before 5 o'clock, but typically you want to be closing your trade before what 5 p.m. New York time. If you're intraday to that, you want to be closing your trade before what that period. So this should be done New York close, sorry. New York close, not London close, sorry. So you should be looking to take your profit around that New York close when the market is about to close, while the New York session is about to close. That's basically what we're looking at for from the higher time frame stance. All right. So that is basically all you're looking at for. So yeah, let us look out for just one example. Let's see if we can see one example on this. All right, so I'll take out all this and then just simply rush over to the chart. All right, let's assume as I don't know, I don't really look at life examples before this call. So the market was bullish today. So let's bring in our tool. So let's bring in our tool. Let's go for where the market was very clear. Okay, let's use this one. The market was very clear. All right, so let's look at it. This was a bullish market. This market did not consolidate. Remember, I want to see Asian consolidate. So market did not consolidate, so it was not clear. Remember, Asia must consolidate before you can see what the clear price action you want. So we have what our Asian range here. So what do we do first? We mark out our midnight open there, right? What did price do? Price came below it, swept the Asian low first, and then maybe if you look at lower time, we are seeing a buy. So maybe if you got a lower time buy, right? So we had that Q zone. When did this happen? This was around okay, so 2 to 5. Wow. So markets came back exactly here. So this is our Q zone. Remember what we're looking at. So looking at our Q, this is our Q zone, 2 to 5, this 2 o'clock. So what do we see there? So the market took an Asian low, broke structure, came back there. Did it come back there? Yes. It was between what 2 to what 5. Perfect. So market bought, and then this was our Q zone. You can see that this line helps to show my Q zone too. So this I use this indicator for my Q zone as well. Remember that indicator I told you guys about in the previous call. So watch the call if you haven't. So saw this. Can you see this? So now what do we have during New York? What do we have during New York, right? So now we had that gap. So we look at what's the next key zone, which was 7 to 10, right? So we had our 7 o'clock here, right? This is 7 o'clock, and this is 10 o'clock. That's our New York key zone, right? So this is 10 o'clock. What happened? The market, created another block here, and what happened? It came back during that Q zone, right? Note the setup forms during Q zone. You must not enter during Q zone. The setup forms during Q zone. You must not enter during Q zone. So once the opportunity form during Q zone, and that's when you're putting in your limit. So you're putting your limit during the Q zone. It's not that it's after the Q zone. The setup must form during Q zone, but it must not activate you during Q zone. Note, price must not activate during Q zone. So market formed a beautiful thing here, right? And then if you bought here, maybe you'd have cost maybe this little buy, and then the market finally came below. If you held, to have still been they're heading to the next day. So if you bought here, stop loss around here, maybe I'm taking it on this, and market CD was reversed, right? So let's look at another example. This one was kind of whipsaw market. I'm looking for something very clear, something really, really clear. Let's go. This market has just been ranging, has been ranging. So I had a bullish day here. Market was kind of ranged a bit, came below, right? Gave some beautiful buy during what? Can you see the time period between what? Between New York Hills, London Hills zone, market bought and all of that. So I'll show you guys more examples as we progress. Right? I don't want to make this call so long, right? It's not be so long. So I'll show you guys more example as we go as we continue, right? But please do have to back test this information, right? Back test this thing I just showed you guys. Back test this thing I showed you guys because it works. So New York either reversed or it was what it continues. So in this case, New York already took out this high, right? That's why it kind of stored. But in the cases where New York does not take out highs, maybe in tomorrow's call, when I'm talking about optimal trade entry, right? I'm focusing on the New York session basically. So optimal trade entry tomorrow, I'm focusing on New York session, right? So tomorrow is 2 in 1 call as well. Talking about OTE and smart money concept as a strategy, right? So tomorrow is smart money strategy, and then it's just talking about strategy, right? So talk about tomorrow. So don't miss tomorrow call for anything. If you enjoyed this call, you want to like this video, subscribe. If you want to join our paid mentorship where we have more than 150 videos that explain all these things in deep details. Do want to send me a DM and join immediately. All right, so see you guys tomorrow.